Hey, traders! We had some technical difficulties in the closing moments of the chat, our Ask Me Anything session that we do every Friday in the Simpler Futures and in our Sector Secrets Mastery. And I thought, you know what? Let's get on YouTube here to wrap up the end of the week and talk about what happened today. What does this mean going forward? And follow up on a great question that I got during Charts and Coffee this morning, or was it yesterday, that asked, hey, Rod, can we have a follow up on the light at the end of the bottom conversation that you brought up back in July, right? So I thought this is perfect timing for that because where we are looks a lot like it. It might on the surface. Let's talk about that video. Let's talk about where we are right now. And let's talk about what we are going to start using now that we're past the summer trading season, going into fall. What is going to be the way we can best decode this market? All right. If you have any questions, feel free to ask. And again, this is live. This is happening right now. And the idea here is taking a look at the daily time frames and just kind of going back to that July 7 video. Now, if you're at the Simpler Trading YouTube channel, or if you're not, head on over there, go back. Yes, we're going to go back kind of far. But on July 7, you'll see that's what this line here is on the chart. I said there's a light at the end of the bottom. And I'm going to show you how I determined that, what I saw, and what I'm not seeing this time around before we think, oh, it's time to start buying again. On July 7, we started to do something really important. And I'm going to show you this because this is a tool that really makes the understanding of the underlying market structure and therefore the type of strategy and therefore the type of indicators we're going to use much clearer. Right in here, on the day that I released that video, we started segueing from the red trend, you can see here, to the yellow. That's really important, gang. Keep that in mind. We need to have a neutral trend to start thinking about whether or not we're seeing an opportunity to buy. That wasn't the only thing, although that was the first part of the conversation. We had a lot of macro stability back then. The expectation was that the Federal Reserve were going to hike to about 3.25% to 3.5%. And that was what the Fed fund futures, the target rate probability, looked like. Now, if you've joined me on Charts and Coffee, and if you have been for, throughout the year, we've been very steadily looking at that graph. And it was really stable. Stability in expectation for rate hikes. Another thing to take a look at, yields, bond yields, were actually gradually moving back lower. The bond market was going higher. That means yields were moving lower. And guess who else was in a nice neutral trend? A few days before the S&P transitioned, the long bond, the ZB. All right, so now we don't have the concern for any kind of increased yield. In fact, yields are dropping. And the indices are going neutral, S&P. Yields are dropping. Target rate probabilities are steady. What's the last, if you're looking at a sort of a trifecta of symbols? Now, I know a lot of folks want to know what's going on with the dollar, but it's a pain in the neck to pull up the DX futures. The easiest way to move around not having a live DX futures feed is actually the 6E, which is the euro. You can pull up 6E on almost any platform, and this is on Toast. You can have a live feed of what's going on. This is from the CME. 6E at that time was stable, not in an uptrend, not dramatically moving lower, but it was stable around parity, which is the 1.0 level. So we're not seeing a dramatic amount of US dollar strength. Believe me, it was still strong, but not a dramatic amount of US dollar strength, stabilizing around that parity level. So yields are dropping, indices are going to neutral, dollar's pretty stable, although near the highs. Okay, so this is what was happening during that video that I cut back in July. And then, so what did I say? What was the punchline? Gang, don't get short. This is what I warned everybody. Don't get short. It's time to get long the broader averages. And that's what happened from that point forward. Now, one of the things that I was looking at, although it's not something that I look at a lot during summer, it was worth keeping an eye on. And that was volume. Now I'm going to show you sort of the way that I've decoded volume throughout the years, and it's with the volume weighted average price. Now, what I teach you all to do, which is a little unusual, some people do it, but it's a little bit more unusual, is they use a what's known as a VWAP, volume weighted average price. And the V score is a tool that's related to the VWAP. It's a tool that I created back in 2008. And I think if we have time here, I'll show you a little bit of a view of that too. I think you'll love that. Volume tells you a lot about the group that you're trading with. If you have a support level that's supported by volume, now you have size. Size matters. Size matters in trading because you never want to be alone in your trading idea. You want to know that not only do you see that opportunity, long or short, but that there's a group around you, because where there's size, there's commitment. We know this because we're always curious about size in some form or fashion. If you take a look at the beginning of the year, right, we have bottomed out near, and don't worry about the gobbledygook of the math, but see this low right here? How many times have we gotten near that low? In fact, you know what? I'm going to clean this chart up just a little bit for us here. I love my multi-trend, but just in the interest of making sure everyone can see the read of my V score, let's clean this up even a little bit more. All right. How many times have we bottomed out near this level? So I'm just kind of extending that level forward. And you can see how many times since the first of the year have we bottomed out near that level. As close as we can get to it. Here and here. Twice before. Got really close. The idea is at that level, we have size, gang. We have size. We have volume telling us, if you're thinking about the jargon of the standard deviation, think of it that we've wandered too far away from home. Home being the mean being zero being that white line across that. We just wandered too far. That's what this thing is measuring. We wandered too far, as close as we could to that low, which is nearly a -3 standard deviation twice before. Well, let's see how that synced up. This was in May. Decent little bounce. Not great. And then, but it's a bounce. And then here it is again in early June. All right. So that tells us there's size here, right? There's some size here. So when we started going neutral in the market trend and dollar was stable, near the highs, but stable, bond yields are going down as the bond futures were heading higher. We went neutral, right? Hence my video in the structure of the S&P. Look at what happened. Volume was a big reason I was as confident as I was. You put all that together, right? You want to put all that together. Let me show you something else here. This is the weekly chart of the S&P, all right? And we're going to go back to 2019. Now, 2019 was a bumpy year. I know we all think about 2020, but the transition from 2018 to 2019 was pretty bumpy. We were in the transition of a series of rate hikes from the Federal Reserve. They hiked one more time in December. The market absolutely freaked out, and the Federal Reserve said, "Oh, our mistake." They stopped hiking in Q1 of 2019 and signaled that to the market. And we were starting to move higher again. That was 2019. Well, here comes 2020. We know what happened there, right? But I want to show you something. Take a look at what we did right in here. Okay. That's the slow stochastic. I've shown you that a number of times. Take a look at this. That's their V score. So I'm gonna clean this chart up a little bit here for you. Let's clean this up just a bit. Actually, you know what? I'll just squish it out of the way. That was your dramatic low with 2020. Are we anywhere near that? Take 2020 out, unless you think that's where we're heading, and that's fine. But take this out and ask yourself, how many times have we been to the mean, or about a -0.5 standard deviation? Mean. This is the weekly chart. Okay. Look at what else was syncing up with those reversions to the mean of the standard deviation of the volume weighted average price, right? We're above the 200, right? I'm not going to use COVID as normal for anything. That sell off, that pandemic sell off. Boom, boom. Am I saying that we're incapable of getting down to these lows? No, all I'm saying is there's a lot of levels of resistance that sit between where we are right now at approximately 3,700 and nearly whatever number this is. I don't even remember what the COVID low was. It really doesn't matter to me. 2150. It's a lot of distance there. It's a lot of distance there. So if we're going to think about tactically what to do from here, I'm going to be very interested to see how the mean on the V-score holds and how the 200 propulsion holds. I'm going to be very interested in that. By the way, if we happen to get crushed, I don't necessarily need the market to match that low. I'm more interested in the market matching a -3 standard deviation, because it's not just price that I'm interested in. Right there. It's volume, size. It's having not being out there alone in my trading idea, knowing, oh, there's other traders that are looking at the same thing, because that size creates volume. That volume gets attention. And the bigger the volume is, we can kind of guess the bigger the players are. Okay, that's a pretty extreme example. And you can see up until that point, what did we do? We bounced along right around the mean, which is pretty much where we are right now. But let's use another really dramatic example, and then we'll wrap this up. Because I really want to show you all that there is opportunity, and there's a way to measure this, and there's a way to take advantage of these moves. Okay, let's say we go back. Let's go way, way back. Let's go back 15 years. Okay, I think we can go back 15 years on this weekly. Okay, and then I'm going to anchor this. You know where I'm going, right? 2007, 2008. A lot of folks are talking about that meltdown as well. How did I manage that? Same tool, gang. In fact, this is where this tool was born. Same idea. Anchored a year, right? So this would have been an 07 anchor. Well, the anchor, don't worry about the anchor. Just remember that we're studying size. Take a look here. There's your lows. Gang, that's 2000. That's the move. I know it doesn't look like much. It doesn't look like much. But, let's really get a feel for what that felt like and looked like, right? Let's get a really good look for what that looked and felt like. And this is a weekly chart, remember. Was I panicked? Look, I was probably as panicked as everybody else out there. This was something that on a scale that we hadn't seen, unprecedented scale. Look what it did. It went a little bit below it, granted, but what did it do? -3 standard deviation. And it's not that the -3 is so magical. That's just where the size kept showing up. So when I'm looking to rebuild my portfolio, if you're wondering, oh my gosh, Rog, what if we have something similar? Whether that's the pandemic lows or whether it's something like 08, study the volume, gang. Study the volume. That's what I want to give you all, because I get we're all in that same pressure point. We're all feeling that same concern. There is that panic, but before it turns to panic, how do we calm that down? We calm it down with what have we done before? How did the market respond? And what can we do now? What can we do now, right? Those are all things that we can think about in this environment. And I hope that gives you something to consider. I hope that gives you something to think about. Now, a lot of you are going to say, Rog, where do I get the V-score? Most of you probably know with most of the classes that I do, whether it's a day trading class we did last year, I think most of my ETF classes, this was part of a very popular bundle offer. This is a premium tool, yes, but I wanted to show you how I measure size. And then at the middle or end of October, we're going to have a far bigger series. We're going to do a webinar. We're going to talk more about not just V-score, but how do you use volume to decode what's happening now? Because I think a lot of you know volume means what? Volume means size. And who's size, gang? As we like to call them, big money, call it institutions, banks, hedge funds, pensions, whatever, they're going to come with size, right? So if we can measure that, that gives us a slight edge. We don't want to be alone in our trade idea. And that includes sell-offs. If you're going to be looking at, Rob, could there be momentum for this? Guess what I'm going to do? I'm going to decode this with volume. Is there volume? Is there outsized volume that's accompanying the move lower, right? So bottom line, gang, this is not the same environment where a number of tools, including my V-score, said, hey, let's get long in here. This is not the same environment. This is Jackson Hole, this is CPI, and this right there was the FOMC. We don't have the same environment. Think about that trifecta I showed you of Euro, long bond, and the S&P. And then take a look at where we are on the V-score. This is not bottoming out. So unlike before where I said, oh, we're bottoming out, got it. Bottoming out, oh, we're going neutral on the trend. Let me send that video out to everybody. We don't have that environment right now. In fact, today's the very first day that we're going double red. So I'm not going to say, hey, let's start setting up a long, but we will continue to day trade. Next week when I see you all, and I'll make sure I do this in a free video, I use the V-score intraday too, right? I use the V-score intraday too. So I hope that gives you something to think about. I hope that this information and this knowledge and understanding volume replaces the panic. There is a way to understand better, whether you're bearish or whether you're bullish, what the likelihood is for the continuation or for the breakdowns or even potentially for a bounce. Is a bounce a little premature here? I do believe a bounce may be a little premature here. If there's a reason for that setup, we'll see if there's a pattern or something that occurs. But if you're looking for size, it's not here yet. It's not the same setup as I shared with you all back in July with this tool. Okay. All right. So I hope that makes sense. Again, we just cut this video here really quick because I was going to get ready to share this with our members in the Sector Secrets Mastery and in the futures room. But I thought, you know what? It's so important. I want to make sure that everybody gets a chance to at least consider it. You don't have to buy into it completely, but at least consider, gosh, that V-score really worked pretty well during 08 and 09, and it did it again during COVID, and golly, it did it again this year. This is when she told us to get long in July, but it's not doing it now. So remember, the tools can get us in, but can also keep us from making mistakes by thinking we're dealing with a similar situation, which, gang, we're not. You know, bonds are heading lower, which means that the yields are heading higher. Our 6E is breaking parity and accelerating lower, which means the dollar is strong. Not the same environment. I hope that makes sense, gang. And I will see you all for Sunday weekly Raggi report. If you have any questions, leave them below in the comments. And I guess it kind of worked out really well because otherwise this was going to be a conversation just with members, but I think it's really going to help a lot of you. And then if you're interested, Rog, yeah, I want to learn more about volume. Stay tuned. We're going to dive into this a lot through Charts and Coffee. We're going to have webinars in October. And if you didn't already know, we're going to be having a class in November. This is going to be the topic, gang. How do you decode the markets with volume? Be good to each other. I'll see you on Sunday.